This conference will now be recorded.
Good evening all. So let's start the session. So I hope everybody are able to see the screen.
Yes, ma'am.
Okay. So balance sheet 2, I had asked you people to solve it. So did you people try?
Yes, ma'am.
Okay. So let's solve it. So I wanted you people to tell me where are the line items I need to apply. Okay. So rupees 1 lakh capital introduced in the business.
Ma'am, in equities capital, we will
Equity capital. Very good.
1 lakh.
1 lakh. Okay.
And
So
in cash, we will
computer
put 1.
purchased worth rupees 20,000.
Ma'am, in computer section.
Yes, very good. So equals 20,000. So here in the
And
beginning of my business, I had 1 lakh rupees with me. So cash, I had 1 lakh. So here 20,000 rupees, I'm paying it for my computer. So that will be equals minus 20,000. Money is going out from my pocket. So I'm taking it in minus. Then advance rent. So here advance rent rupees 10,000. So I need to take this advance rent 10,000, and this also I am paying it by cash. So equals 10,000. Then deposit rupees 20,000. So deposit equals 20,000. So that also I am paying it in cash 20,000. Okay. Then bought 100 books worth rupees 100 rupees. So payable equals 100 into 100. Sold 50 books at the rate of 200 per book. So sales equals 50 into 200. Again, I bought one more time. I bought the books, 100 books out of 100 rupees. So each book. So equals 100 books at the rate of 100 per book. Okay. Again, I made the sales of 50 books. So sale 2 equals 50 into 200. Here inventory. So equals. So I bought 100 books at the rate of 100. Then minus I sold 50 books. So in order to sell that books, how much amount I have incurred? So 50 into 100. So the first one, next one equals again I have bought 100 books at the rate of 100, out of which minus I have sold 50 books. So in order to buy that 50 books, I have incurred so 100. Okay. So received amount. So here how much is the amount I have received? So that will be sales equals 50 into 200. So sale to received. So 50 equals 50 into 200. COGS. So cost of goods sold. So it will be, so I have sold 50 books. So the cost that is incurred. So I have spent 100 rupees per book for this. COGS to 50 into 100. So salary. So salary 5,000 rupees paid. So 5,000 rupees salary I am paying. So here I need to tell. So salary I am paying it by cash equals minus 5,000. So the total assets and liability will be 1,25,000, wherein I have put my income statement as well as my cash statement also. So did you people got this answer? If anybody has not tried, I'll give you some time. You can try this out.
Excuse me, ma'am. I just wanted to ask. Yesterday, my laptop was not in the work, ma'am, so I haven't done that yesterday's part.
Okay.
So, can I continue from here
Yeah,
or
yeah, you
how, ma'am?
continue from here only. You continue from here only. You understood, right? Whatever I have showed.
Yes, ma'am.
Okay, you try this. You try this.
Okay, ma'am.
Just 1 second. I'll check. Yeah, I have put it on record. If anybody is having any doubts, please ask. This is balance sheet 2, case 2, what I am solving. So yesterday I had given it as an assignment. So the ones who have done, check whether you have got the right answer.
Excuse me, ma'am.
Yes, ma.
Ma'am, I haven't put the account payable and account received because I thought since it is dealing in cash, so I added and deducted in the cash column only.
So you are getting it solved.
I am getting 1,15,000.
Differences, right? So
Yes,
here
ma'am.
the account payable. So here I have to show the account payable. That is, I have bought 100 books at the rate of 100 rupees what I have bought. And again, in the second time also, I have bought 100 books at the rate of 100 rupees. Okay. Receiving. So receiving part, I am showing it. I have received the amount. Okay. So 50
Yes,
into
ma'am.
200 and 50 into 200.
Okay, ma'am.
Yeah. So at the end, this checksum, it should be 0. ನಾನು ಲಾಗಿನ್ಗೆ ಪಾಸ್ವರ್ಡೇ ಇಲ್ಲ. Girls, any doubts?
No, ma'am.
Any doubts, please ask. Let's go to the next one. Still anybody is doing? Any doubts, please ask. Hope everybody are able to solve it. Any doubts, please ask. If it is done, please let me know. We will go further. Done?
Yes,
Yes,
yes, ma'am.
ma'am.
Very good. So You people were able to tally the amount, right?
Yes, ma'am.
Yes, ma'am.
Okay. Next, we had come for accumulated depreciation. So the first one and second one I had done. So percentage, I wanted you people to do it. So accumulated depreciation. So here when the value depreciation rate is given in 20 percentage. So how to do it? So PPE gross, it is going to remain the same for every year. That is 1,20,000. So I'll take it as equals previous year value. I'm going to drag it. So now calculate the accumulated depreciation for this. So the first year. So equals first year. So into 20%. So instead of taking the value, I am taking it as this equals. So PPE gross minus accumulated depreciation. So here equals. So PPE gross into 20% plus previous year accumulated depreciation equals PPE gross minus accumulated depreciation. So I'm going to take the value into 20% plus previous year value. So I'll just come here and drag it here equals PPE gross minus accumulated depreciation. So at the end of the year, it will be 0. So I hope you people were able to solve this too. So if you have not done, just do it up and show the formula. Percentage is nothing but when we are taking the value directly, here we are taking it in percentage. That's it. Done, girls?
Yes, ma'am.
Okay, so let's go
Yes,
to the
ma'am.
next one. Accumulated depreciation 2. Okay, so here I'm going to take off this values. So in your this one also just remove it up. So here we are talking about the project finance. Okay, so cost of machine. So here we are going to buy a machine, so worth 25 lakh. So project of 7 years. So the total project is for 7 years, and in this they are telling that 3 years of development phase. So 3 years of development phase means we are not going to use that machinery. So plus 4 years execution phase. That means from the next year we are going to utilize for another 4 years execution phase means we are going to make use of that machinery. Machine will put to use to generate revenue only during the execution stage. So during the execution period means, so once after the third year only we are going to start making use of this machinery. Machine will not work during the development stage. So during this 3 years machine is not being used. At the end of 7th year the machine will be fully utilized and has no value. So by the end of the 7th year, so the usage, the lifetime of this machinery will be ended. So development phase, so here we have given, so the pacing, so 25%, 50%, 25%, so they have said it. So now I need to apply the calculation. So how it is? So the total cost of the machinery is equals 25 lakh. 25, so 25 into 25%. Okay, so next the fixed asset worth, so here equals, so 25 lakh into 50%, here equals 25 lakh into 25%. So here the fixed assets gross, it has been varied. So from the 4th year the value is going to remain the same. So that will be equals first year plus the second year plus the third year. So it is 25 lakh. Okay. So how much amount of the development pays? So 25% of the work is done. Again 50% and the remaining 25% the work is done. So now the total cost of the machinery is 25 lakh. So this is going to remain for the same for the next 4 years. Okay, so they are telling that for the first 3 years, so the machinery will not be used, so machine will not work during the development stage. So I will keep this depreciation value as 0. Okay, so I'll keep it as 0. Second, next, so here I'll tell equals, so the value of fixed asset, so I am utilizing it for 4 years, isn't it? So divided by 4 plus the previous year depreciation value, enter. So let's understand here equals, so the fixed asset, the value of fixed asset divided by 4 years. So where I am using my machinery, so 1 year, 2 years, third year, fourth year, so 4 plus the previous year depreciation. So I'll just come and drag it, and now here I'll tell, so equals fixed asset minus the depreciation. So at the end of the 7th year, what they have told, at the end of the 7th year, the machinery is fully utilized and has no value. Hope you people understood this.
Yes, ma'am.
Okay, I wanted you people to solve this and try with this second sum. So which is almost the same only.
Excuse me, ma'am.
Yes, ma.
Can you please explain it again? I didn't understand how it.
Okay, I'll explain it. So here what they are telling is I'm going to plant a machinery. Okay. So the cost of the machinery is 25 lakh rupees. So the total project is for 7 years. Okay, 7 years the total project is, and 3 years we will consider this as a development phase. Means, so as I am getting the machinery, it has to be planted, it has to start working the procedure. Okay, so the development phase will consider it as 3 years. That means 3 years I cannot make use of that machinery only, because I am still in that installing process only. From the fourth year, I am started using that execution phase. That means I am started working with my machinery. The machinery started working from the fourth year. Okay, so this one you understood.
Yes, ma'am.
So machinery will put to use to generate revenue only during the execution stage. Machine will not work during the development stage. So when I'm installing, I cannot make use of anything, right? So that development stage means the development stage of that machinery. So once after developing it, then only I can make use of it. At the end of seventh year, the machinery is fully utilized and has no value for it. So they are telling that pacing. So 25% of the installation process is done in the first year. Second year, 50% I have covered. That means 75% is done. In the third year, completely 100% of that installation or whatever the development of that machinery was, it is completely done in the third year. From fourth year onwards, I am going to make use of that machinery. So first year what they are telling equals 25 lakh. The cost of the machinery is 25 lakh. Okay, into 25%. Okay, so the initial investment, how much I have done in the case, 6 lakhs 25,000 I have done. Next year equals the cost of the machinery is 25 lakh into 50%. So in the installation process, 12 lakh 50,000 rupees it is done. So out of 25,000, 25 lakh in the second year, I have made the payment or whatever it is, 12 lakh 50,000 it is done. In the third year, so 25 lakh into 25%. So I have got, yeah. So now here I in the fourth year, so the actual value of the machinery should come into picture now. So what I'll do is equals the first year value, the second year value, the third year value. I got my 25 lakh. That means my machinery is completely set in order to start my work. Okay. So in the 4 years also, whatever the investment that I have done for that machinery is going to remain the same. So what I'll do is equals take the value of this. So till the seventh year also the cost of the machinery is 25 lakh only. I have paid 25 lakh, that is going to remain same. So what they are telling, machinery will not put to use to generate revenue during the execution stage, that is development stage. Machine will not work during the development stage. So I'll put it as 0. I am not at all making use of it for 3 years. Okay, so 3 years when I'm not using, I cannot talk about the depreciation. Once I start using anything, then only the depreciation starts getting applied, isn't it? So here I'll tell equals, so this value, so 25 lakh divided by 4. So how many years I'm going to make use of this machinery? For 4 years.
Oh,
Divided by
yes.
4 plus the previous year depreciation. 3 years I have not used only. So when I'm coming to the third year depreciation, it is the same. So here I'll come equals 25 lakh divided by 4. 4 is nothing but useful 4 years. So plus the previous year depreciation. I'll press enter. Now I'm going to drag. So this is the depreciation value. Now let's look at the net fixed asset. So equals fixed asset minus accumulated depreciation. So first year, second year, third year, nothing. But at the end of the seventh year, so what they have told, at the end of the seventh year, the machinery is fully utilized and has no value. So 4 years I have made use of my machinery. At the end of the seventh year, so the value of the machinery becomes 0. Clear?
Yes, ma'am.
So try this out. After this, try to solve this case too. Any doubts anybody is having, please ask.
Done, ma'am.
Second one,
Second one done, ma'am.
second one is also done. What about others?
Done, ma'am.
Okay, so let's solve this. So the first year, so it will be equals 40 lakh into 30% equals 40 lakh into 60% equals 40 lakh into 10%. So the same sequence only, the cost of the machinery is 40 lakh rupees. The project is for 7 years. 3 years will be development phase. 4 years will be the execution phase. So machine will put to use to generate revenue only during the execution stage. Machine will not work during the development stage. At the end of the 7th year, the machine is fully utilized and has no value. So at the beginning of the 4th year, I need to get this 40 lakh rupees. So equals 12 lakh plus 2,40,000 plus 4 lakh. I got this value. So the cost of the machinery is going to remain till the last the same. So accumulated depreciation in the beginning of 3 years. So no depreciation as I am not at all using the machinery. From the 4th year, pick the value. So useful years is 4. So pick the value, that is a fixed assets divided by 4. 4 is nothing but the useful 4 years plus the previous year depreciation. The same way equals, so fixed asset gross divided by 4 plus the previous year depreciation. So I'm going to do the fill handle. Now here fixed asset net, so equals fixed asset minus accumulated depreciation. I'm going to come here and drag the same. So at the end of the 7th year, the value of the asset becomes 0. So everybody has got this.
Yes, ma'am.
Okay, very good. So coming to the next one, that is retained profit. So retained profit, so the sales and COGS, so the values are already given. I wanted you people to put these values because the question is this much only. Shareholders capital is 5 lakh rupees and the first year, second year value, sales value and COGS, that is goods sold. The values are here. So I'll just change the color of this so that you people can understand. Okay, so this values, so it was from before, so while sharing it has got deleted by mistake. I have deleted that. So now I wanted to calculate the gross profit. So gross profit will be sales minus COGS. Okay, so I'll come here and drag it. Now selling and administration costs, what they are telling, selling and administration costs are 25% of revenue for that year. So revenue for that year means, so equals, that will be, so the revenue of the first year into 25%. Second year I'll show, so revenue into 25%. I'm just going to apply the fill handle. Then EBITDA will be equals gross profit minus selling and administration cost. So I'm going to come and drag it. So they have already given the depreciation value. So it will be equals EBITDA, that is earning before income tax, depreciation and appreciation. So minus depreciation. I'm going to come and drag it. So then interest, they are telling 1500 is the interest. So once I calculate earning before income tax, depreciation and appreciation minus depreciation, I am going to get the value for EBIT, that is earning before income tax. So net interest they are telling it is 1500. So equals EBIT minus interest. So EBT, earning before tax. So tax will be, so tax what they are telling, so tax rate is 30% of the earning before tax. So the value has to be put on EBT into 30%. Now profit after tax or net income equals, so EBT minus tax. So try solving this. I hope you people understood. Anybody did not understand, please ask. I'll explain it once again. Any doubts, girls? If you have understood, start solving it. Any doubts, please ask.
Ma'am, how to calculate the PAT PAT?
Which one, ma?
Last one, ma'am. After tax,
PAT, profit
30%.
after tax and net income.
Yes, ma'am.
So here everything is interlinked. So gross profit, it will be like sales minus COGS. I'm going to get my gross profit. So administration, selling and administration, what they are telling, it is on your total revenue for that year. Okay. So sales, first year sales value is 1 crore 25 lakh rupees I have. On that I am going to apply 25%. EBIT, EBITDA is earning before income tax, depreciation and appreciation. So that will be gross profit minus selling and administration cost. Okay. So depreciation, they are telling every year 2000 rupees depreciation is happening. So now earning before income tax, that will be EBITDA minus depreciation. I am going to get this EBIT, that is earning before income tax. So interest, they are telling every year I'm going to pay 1500 interest. So EBT, earning before tax, will be EBIT, that is earning before income tax minus the interest value. I'm going to get this earning before tax. And tax, what they are telling, so tax rate is 30% of the earning before tax. Okay. So here EBT. So here I'll tell, so EBT, that is earning before tax into 30% tax rate. Then profit after tax will be EBT, earning before tax minus tax. I am going to get my profit after tax and net income or net income.
Okay, ma'am.
Excuse me, ma'am.
Yes, ma.
Ma'am,
Yes,
I
ma.
just joined the meeting. Could you please
Hmm.
brief me about this retained profit?
Which one?
Retained
Retained
profit.
profit. So these
Yes, ma'am.
values are already given. Okay. So I'm just going to erase this.
Ma'am,
Yes, ma.
can you please show the formula for that selling and administration cost, ma'am?
So that is sales value, the revenue into 25%. So here, so we are doing the retained profit. Okay. So here the this one in the questionnaire, so this values are not given, so you need to take these values which are in orange color. Okay, so the shareholder capital is given and the sales values and the COGS for the respective years is given. Now I need to calculate the rest of the things. Okay, so in order to calculate the rest of the things, first thing is I need to calculate the gross profit. So gross profit is equals, so sales, the first year sales minus the COGS. So I'm going to get this value. So next year I'm going to take the value. Sorry. So first year I have taken it and I'm going to drag. Okay. So next year, next thing is selling and administration cost. They are telling 25% on the revenue for that year. So whatever the revenue it has happened, on that I have to pay 25% of selling and administration cost. So equals, so the first year revenue into 25%. So I'll come here and I'll apply the fill handle. Next one, EBITDA, that is earning before income tax, depreciation and appreciation. So that will be equals, so 5 lakh, that will be my gross profit minus selling and administration cost. So I'll drag it towards my right, and here they are telling, so the depreciation value is 2000 rupees every year. So every year it is happening. So now in order to calculate the earning before income tax, that is EBIT equals, so EBITDA minus the depreciation. So I'll get this value, and they are telling interest every year I am paying 1500. So now earning before tax equals EBIT minus the interest. So I'm going to drag it. So next one is tax. So tax, what they are telling, so tax rate is 30% of the earnings before tax. So equals, so EBT, whatever it is there, on that into 30%. So I'll come here and I'll apply the fill handle. Then here, so profit after tax or net income, that will be EBT minus the tax. So this is what the values you need to get.
Yes, ma'am. Ma'am,
Yes, ma?
the values that have been taken for sales,
Hmm.
they are not there in
Yeah,
our
yeah, in the questionnaire it
machine.
is not there. So by mistake I have deleted it. So that's why I have highlighted. So you need to put that value and then apply the calculation. So in the
So,
questionnaire,
ma'am,
the
only the
values,
sales value we have to apply.
sales and COGS, that is cost of goods sold. So but that first two lines you need to put the value.
Okay, ma'am.
I hope everybody understood this.
Yes, ma'am.
So shall we calculate the owner's equity?
Yes, ma'am.
So owner's equity. So what is the shareholders fund here we have to take means? So that is 50 lakh rupees. So I'll take equals 50 lakh rupees. I'm going to fix it. Okay. And I'm going to take the value. So 50 lakh rupees, it's done. So now retained profit. So retained profit will be equals. So retained profit, that is profit after tax plus 0. Okay, previous year value is nothing. So I will take it as 0. Enter. So the next year it will be equals. So second year retained profit plus the previous year value. Okay, enter. I'm going to do the fill handle. Now total owner's equity will be equals shareholder funds plus retained profit. I'll come here and drag it. So this will be your total owner's equity. Clear? You want me to explain it once again?
Yes, ma'am.
Yes, ma'am.
The shareholder fund. So shareholder fund, how much they are telling? It is 50 lakh rupees shareholder capital. So what I'm going to do is I'm going to take this value C3, that is 50 lakh rupees, or else if you get confused we are going to write it here only 50 lakh rupees, and this is going to remain the same for all the years. Okay, 4 years the shareholder capital is this much only. So now here they are telling to put the retained profit. So retained profit is nothing but in your income statement, whatever the net income or the profit after tax you are getting. So that will be your retained profit. So equals the first year value. So the first year value has to be added with the previous year value. So previous year value nothing is there. So I'll put 0 and enter. So here I'll tell equals the second year profit after tax, that is my retained profit, plus the previous year retained profit. I'm going to apply the fill handle. So this is done. Now what is the total owner's equity? So total owner's equity will be equals shareholder fund plus retained profit. So I'm going to drag it. So this is how the retained profit, that is owner's equity, will be calculated. So once after this, try solving this one, owner's equity for case 2. So profit after tax, they have given the value over here. You need to calculate the owner's equity. Any doubts, please ask. Are you people able to solve this?
Yes, ma'am. Done.
Okay.
Done, ma'am.
So what about others?
Done, ma'am.
Very good. Okay, next coming for net debt. So loan taken in the bank, 5 lakh rupees. If no repayment is done in the year, so the amount is going to remain the same, isn't it? So if I am not paying any amount in the first year, I am not paying any amount in the second year also, I am not paying any amount in the third year also. So the amount is going to remain the same. It is not going to get cleared, isn't it? So if the repayment is done for 4 years equally, if the repayment is done 4 years equally, so how the calculation would be done? So let's see that. So the debt amount is 5 lakh rupees equals 5 lakh. So for every year, this is going to remain the same. So they are telling EAI. So that is equal annual installment. So equals 5 lakh. So 4 years I am going to pay divided by 4. So this is going to remain same. Every year I am going to pay 1,25,000, 1,25,000. So debt. So first year debt amount minus repayment. Okay, so this will be equals previous year debt amount, the remaining balance. So here I'll come. One second. Okay, let me do it from beginning. Equals 5 lakh. So the debt amount, it is going to remain the same. EAI will be equals debt amount divided by 4. And this is going to remain same for all the 4 years. So EAI debt amount. So after repayment, EAI, how much is the amount pending? So debt minus repayment. So here next year will be, so next year beginning, so whatever the amount that is left. So I have paid the whatever the debt amount and the equal annual installment. After paying that, the remaining one will be carried forward for the next year. Okay, I'll come here and I'll drag it. So here this amount is going to remain same for all the 4 years. So here it will be equals this amount, debt amount minus the EAI. So I'll come here and do the fill handle. So at the end of the last year, so the loan amount will become 0. Got it? Any confusion? Shall I explain it once again?
Excuse me, ma'am.
Yes, ma.
Ma'am, we don't have to do anything in case 1.
Nothing. So if I am not paying any amount, so here they are telling that I have taken the loan. If no repayment is done for 4 years, first year I have not done any repayment, second year nothing I have paid, third year nothing I have paid, means fourth year what it will be, whatever the loan amount is, it will be remaining the same. If I am paying some amount, so here I am paying 4 years equally. So repayment is done for 4 years equally. I am making means 5 lakh rupees I have taken in the first year. Okay, first year I have paid the EAI, so that will be like 5 lakh divided by 4. That 4 is nothing but the 4 years. Okay, so EAI I have paid. So now what is the amount that is left after paying the repayment? So amount is debt minus EAI. I am going to get the net debt that is left. So second year, so the first year the ending loan amount what is was there, that will become the beginning loan amount. So EAI, what they are telling, we are going to pay it equally. So I am going to drag it. So the second year, whatever the amount it is paid, remaining amount will become the opening balance for the loan. So here, then again EAI I am paying for the third year, so the remaining. Fourth year, the opening loan amount will be the same. So EAI I am paying. At the end of the fourth year, it will be 0. So if I am paying some, making some payment, if I am not making some payment, here you need not have to solve anything. Okay. So directly you need to go to the case 2.
Ma'am,
Yes, ma.
so when it's given that the repayment is to be done equally, the EIA will remain the same throughout how
Yes.
many ever number of years?
Yes, yes. So every year I am going to pay the same amount. Equally means it will
Okay,
be
ma'am.
the same. So after this, I wanted you people to try with this net debt too. So where they have given the debt schedule. So loan taken in the bank is 50 lakh rupees. Interest rate is 15%. Loan period is for 4 years. So I have to solve this. So debt schedule, two things they have given. So let's keep this one as an assignment. I wanted you people to solve it. So tomorrow, if you don't understand also, never mind. Tomorrow I'll solve it and show. But still give a try if you can solve it. Any doubts? Are you people able to do it? Done, girls?
Yes, ma'am.
Yes,
Any
ma'am.
doubts in this? Any doubts in this?
No, ma'am.
No, ma'am.
Okay, so I wanted you people to try with this net debt too. So where in case one schedule they have given, debt schedule, loan taken in the bank is, so it is 5 lakh rupees. Yeah, 5 lakh rupees. Interest rate is 15%. Loan period is for 4 years. Okay. So you have to create the debt schedule. So next case study, loan taken in the bank is 2,20,000. Interest is 12%. Period is 7 years. So I wanted you people to try with this too. So tomorrow we will solve this and we'll go further. Okay. So any doubt in today's class?
No, ma'am.
No, ma'am.
Okay. So shall we
No,
wind up the
ma'am.
session for today?
Yes, ma'am.
Okay.
Yes, ma'am.